All right, we've got now Mr. D. Sarkar, who is Chairman and Managing Director of Union Bank of India, joining us on the show. Mr. Sarkar, to begin with, now that the Reserve Bank of India has cut the repo rate by a half percentage point, what's the sort of leeway this gives you to ease your rates? Has any decision been taken by your ALCO?
We are yet to meet in our ALCO meeting, because tomorrow is our board meeting and other committee meeting also. So we are hopefully that we'll be meeting day after. We have already started some internal calculations on that how really it can be passed on to, because our feeling is like this, that certainly the market it is a great signal from the RBI that okay, rate should be reduced, and that is expectation from the market also. So we are already on the job, and we are just various options we are looking into, that which are the segments we can really look into, and therefore how we can really, if we reduce at this moment some rates, so how really we can maintain this our net interest margin. So all options we are just examining. Maybe day after we'll be meeting in the ALCO in the Saturday, and thereafter we'll take a view whatever the best we can do in the interest of the borrowers and the depositors as well as in the market.
But, Mr. Sarkar, while I would imagine, push ahead with lending rate cuts for various reasons, market determined reasons as well, how easy is it going to be for you to cut your deposit rates?
It is a really very crucial question, because, the market still liquidity issue is there. You might have observed that, okay, this day before also the repo was reduced to around 80,000. Which is all along it is 1 lakh plus. Then again yesterday also it is 1 lakh repo has been traded in the market. So that means that still the liquidity pressure is there. I feel that okay, it will take some time to build market little bit more liquid in course of time. So if the liquidity is certainly that time only, I feel that the deposit rate may reduce. So what my feeling is that until really the deposit cut also is being matched with the lending rate cuts, so certainly we have to match in this way. So my feeling is that it will take some time to little bit ease in the market.
Right, but Mr. Sarkar, just before the budget, many of your colleagues in the industry had represented to the Finance Ministry that long-term deposits ought to be treated at par with tax-free bonds, that the tax benefit ought to be extended even to fixed deposits. Now that you are in a situation where you are having to compete very aggressively really with other instruments like tax-free bonds issued by infrastructure companies, are you planning to take this back to the Finance Ministry once again and ask them, request them to review this whole this current position? Can we expect that you will take this back to the Finance Ministry?
Now, certainly we can just make a request to the ministry to take it, because, banking, certainly the resource is very much needed. And considering the last year's positions, you have observed that really the rate of growth of the savings and other deposits are not up to the mark at all. So I think that options certainly we have to, we may request also to again consider that, okay, how we can really maintain the resource flow in the banking sectors at the easiest point.
In fact, Mr. Sarkar, you had clocked in Q3 net interest margins of close to 3.3%. Do you expect to maintain your margins at these levels?
Our rough calculations we have done earlier that okay, we are trying to maintain at 3.20 expected, because that's our target. So let us see the year. I think the audit to be completed, other calculations is also on the way. So we endeavor to maintain that, at least that should be maintained. That we are hopeful to maintain it.
Right, now, Mr. Sarkar, there's a fair bit of concern regarding the asset quality of Union Bank of India. In fact, there was that ratings agency downgrade just recently because of that one big factor. What's the position now? Are you expecting that the situation will ease up in the forthcoming quarters?
Situation is improving, and we have already taken so many proactive steps, because certainly one is that recovery measures that we have really strengthened a lot. Secondly, the slippage restrictions, because how really the slippage can be restricted, we are taking the NPA position on real-time basis, that we are taking that, okay, which are the area basically we have to take more care. And you know that, okay, most of the cases is the small loan, agricultural loan, SME loan, which is basically needs a close monitoring. And I think as because the system-driven NPA is there, we are very much on the line that we'll be able to really to make it easier. And I feel that we endeavor to get, and we'll get the result that it will reduce in course of time.
And finally, what's your outlook for credit and deposit growth for FY13? Are you seeing signs of corporate credit demand improving?
Not yet just observed, but some of the queries started coming because maybe some of the corporates also expecting that, okay, they are waiting for the rate to little bit reduce. So, though I cannot tell that, okay, the market is immediately just started the reactions to get the new proposals or the new lending proposal as such. But we are hopeful that when the corporates have started inquiring, I think that things will improve. And maybe that in course of time, because you know first quarter is always little bit remain subdued. So we are hopeful that we are expecting good monsoon also as per the meteorological report. So we are hopeful that certainly the demand will be pick up little bit in course of time to come.